You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again to kick off another exciting week here on the old Options Insider Radio Network, and indeed on the old Option Block program. My name is Mark Longo from the OptionsInsider.com, as well as of course, from the easy for me to say today, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs, 15, I do believe, if you count them all up, to be precise, for you guys to enjoy at your leisure on the old network. Easiest place to find it, theoptionsinsider.com, as well as, of course, all of your myriad and sundry and various outlets, iTunes and TuneIn and Stitcher and Pocket Cast and Google Podcasts. And if some of them aren't on all of them for some reason, let us know. I think some of them, they have different cover art standards and everything else. So getting everything onto every platform sometimes is a bit of a bear, but if you absolutely have to have it on the Czechoslovakian version of Pocket Casts, let us know. We'll see what you can do. The easiest way around that, of course, just head on over to the App Store and grab our mobile app, available for iOS, Android, and the ever-evolving Fire. I have to check someday and see who's actually rocking the Fire OS version. I'm sure some of you out there are. I'll have to shoot you a personal email and say thank you, all three of you who are using that version to make our developers' time so worthwhile. All right, and of course, however you listen, including those of you who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Stay tuned to our Twitter or Facebook, and you'll see the link there. And you can follow along, see how the sausage is made and all that fun stuff. And, of course, however you listen, make sure you hit us up. Questions, comments, insights, all that jazz. Questions at theoptionsinsider.com. Pretty much the easiest way to get at us. And, of course, all the aforementioned social media platforms as well for your legion, your plethora, your Niagara Falls of questions, and we love to hear from you guys. And joining me on the old program today, let's see who we got on the old magic dial. Let's start, I don't know, let's pick this one here. There's no picture on this. I don't know who it is. Let's see. I do believe, though, it is Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here on a Monday.
Yep, we don't have a case of the Mondays on the option block. We just have a case of kicking off the week, and we're very excited to do it. We are also joined by, who knows where the heck he is, listeners. Let's just tune in and find out. By the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line. Mr. Greasy Meatball, welcome back to the Option Block program. And where the heck are you today?
Hey, good to be joining you. I'm from the playground at AF Ames Elementary. We're watching a couple of twins and a little boy play some football, and it's the same fun it always is.
It sounds highly conducive to all things quality trading. All right, with the team assembled, some of my best trades made from the playground of an elementary school. All right, some football card trades, probably a few other action figure trades in there. Who knows? All sorts of varied and sundry trades going on. So keep an eye out. Maybe get some ideas there, Mr. Greasy Meatball. But with the team assembled, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was rocking and rolling in today's market activity, and it was rocking and rolling for quite a bit today. S&P and other indices off at one point over 1%. They ended up the day a little bit quieter, a little bit more towards the middle of the range, off only about 0.6 of a percentage point. The Dow and the Qs off about similar percentages. So they kind of towed the line and then came back from the precipice there. For a while there, though, we were seeing a lot of very dire headlines. You know, S&P, Dow, their worst day since October, 3.5 months. And all these other things, of course, had the biggest spike in VIX cash, which we did have again today, ended up about 1.25 points, a little bit shy of that 12 handle, 11.81 to be precise. Let's see exactly how high. He actually got as high as 12.90 intraday, so flirting with that 13 handle. So it was looking a little bit more dire there today. Of course, this is a combo of a lot of things. There, of course, has been a lot of heated rhetoric over the immigration issues here in the U.S. and some of the recent executive actions to that effect and how that's going to be impacting tech and a lot of other things. So a lot of that seemed to kind of get the snowball rolling to the downside this morning. And there's also economic data and other things kind of lurking on the horizon. Maybe that spooking people. We got non-farms at the end of the week. We do have actual earnings coming out this week as well. So all of that seemed to maybe get that snowball rolling, and it got going got a pretty good head of steam intraday. Then eventually, like I said, pulled back from the precipice, and cooler heads prevailed. It does seem, we're kind of in the teeth of a very aggressive near-term bull market when everyone and their mother, oh my God, a down day. How dare the market have an aggressive down day? How dare the non-stop party that is the bull market take a breath? And so maybe this was a good thing, a little air out of the tire, so we can continue racing forward. That said, let's start with you, perhaps, Mr. Uncle Mike. A lot of interesting things to keep an eye on in today's market. We'll get to some stuff coming up in a little bit, but before we get to that, what was catching your eye in today's activity, sir?
Well, this is the kind of market I love to buy, quite frankly. I tried to get in a put spread towards the end of the day, but I'm very greedy with the premiums that I'm trying to get, and did not get filled. So with that, we just kind of came up a little bit. And it's always this is a type where I want to be very strict on where I get filled at. So a quick non-strategy block commercial. If it's not exactly what you want, don't do it. And so I didn't. But this is the type of market that I like to buy on days like this. We had an initial downturn, and then we're kind of channeling towards the end of the day. And then we rallied a little bit too much for me to catch it towards the end of the day when I usually like to get into such things. So I like today. I think it's an opportunity, quite frankly. I think that in a pullback like today in the middle of a bull market where we're moving like we have, we had a little bit of a pullback on Friday as well. I'm very optimistic for the course of the next couple days. We do have a lot going on this week with which we talked about, but we'll see where that goes. The metals were rather tame today, nothing too crazy. I think GLD is up 50 cents, which is not much in the GLD world. SLV was virtually flat. Bonds were down a little bit. And the major thing, not major I should say, but one of the main things that I did notice is that we did have a little bit of a pullback in the energy stocks. We have XLE down $1.38 on the day, but a lot of other places, it was just kind of a slight down day as I'm looking across the sectors, across the board. So not a whole lot. But then again, the market wasn't down a whole lot either. So I would say the main thing that really lit up my tape, as the wise host would say, that would be the energy stocks coming down a little bit.
Yeah, we'll have to get an update one of these days. I'm sure some people have been asking. I haven't checked, but I'm sure they will. They'll want to know soon. Some updates, if you've done any to that old school long-term SLV collar. So if you have anything coming up, maybe next week or something, we'll get a check-in. We'll do like a monthly check-in. How's that sound?
It's perfect. I mean, once I do something, I'll be glad to update it. But as of right now, I haven't done anything to it yet except watch it go up.
You got the old Ronco set it and forget it model. I like it, sir. It's a very relaxing way to trade. Speaking of relaxing, playgrounds can be the opposite of relaxing, especially if you have to watch some people. But that said, in between breaking up fights there on the playground, Mr. Greasy Meatball, what caught your eye in today's activity, sir?
Well, we're off the playground now, which is nice. Glad to be away. We had, I'll tell you, at no point in time did it seem a little panicky. But the only thing that really caught my eye was VIX was up like 12 points at one point, almost to 100. So there was some people, I think, that got caught short a bunch of vol and were maybe covering, which is one of the reasons why we saw such a nasty move in VIX and in VIX futures for a little bit. I would also note that this is one of those days where, the VIX is up 20%, and you realize that it's up, it's all the way to 13, and so it still doesn't really matter. This is one of those times where understanding VIX context really is important. Like Mike, I saw energy getting a little soft. There's some kind of rumors that OPEC may break their production cuts later in the year. There's rumors of shale waiting to get turned right back on. There's all kinds of little anti-oil things going on. Now, here's my bullish piece. Dennis Gartman was out with something saying market might be near a top because of the dollar. The dollar might get soft. And, that was by far what made me say, you know what, I will buy this market.
There you go. Very contrarian of you, sir. But there are, like we said, some things to look forward to in the old marketplace today. A lot of you guys still, even though we joked about it on recent episodes, that Apple, not exactly the home of zealotry the way it used to be, where everyone and their mother had to buy the stock, had to buy the upside calls, and it was just a haven. If you had anything other than a bullish viewpoint, you were just not welcome. But it made for good trading either way. Those days may be a little bit behind us, but still, Apple's interesting one. Of course, they are popping off after the bell tomorrow, so we won't have a chance to preview them or break them down live. So we thought we'd do a little bit of a pre-earnings analysis out there on Apple. They were lurking around the 121 level most of the day today. Closed around right around 121.5. So fairly lofty levels for Apple, despite all the grumbling about tech and the impact of Trump. They're still feeling a nice little halo from the last few months out there in the marketplace. They were pricing in about 4 1/4 looks like or so going out there. So about 3.5% is where that straddle pretty much went out. I don't know, Uncle Mike, you used to be our resident Apple head. Let's see, before we even get to that really quickly, it was a fairly light day out there today. I guess people are kind of keeping their powder dry until tomorrow, the actual earnings day, when we'll probably see a little spike in volume. They've been averaging about 425,000 contracts a day, only doing a fairly meager 386,000 contracts today. So maybe today everyone was still playing the wait and see game. That said, waiting and seeing. Uncle Mike, I know you've been guilty of doing a little bit of that yourself out there in Apple land of late. So tell us, what do you have working out there? Any complex, crazy 1/3, iron condor ratio swaps and all the other fun stuff we've come to expect from you out there in Apple land, sir?
Unfortunately, I just have it as a smaller holding in the larger portfolio. The innovation index is still too low for me to justify getting into it at these levels. But what I do think is interesting to look at is, number one, you can never trust Longo on when he says Apple earnings are. He's given me many heart attacks on that through the years. So first I need to verify, are earnings really tomorrow?
Yes, you can confirm that, sir. And there's a rare secondary earnings announcement this Friday, but you really want to pay attention to the Tuesday one. That's a more important one, I think.
Agreed.
The Friday one, don't pay much attention to the Friday one. It's kind of a weird one. It's only for overseas analysts. Kind of strange.
Got it. So I'm just looking at the straddle of Apple. So the 121 puts are at about $1.90. The 121 calls are at 250. I know it's at 121.60, so it's not really a true example of it. But the market's expecting just maybe a little bit over a $4 move, apparently, with Apple so far for these earnings. And I got to say, if I had a gun to my head, me not being the Apple person that I once was, but throughout our 500 episodes, I have talked about Apple many times, and I've been ridiculed for being bullish on it so many times by people that are named Mark. But if I did have to, if I did have to be a betting man right now, which I'm not putting my money where my mouth is on this. I think we're going to move a little bit more than that. Just looking at this straddle, I'd be a premium buyer going into earnings if I were to put my money where my mouth is, which I am not.
Well, Mark, weren't you saying too that this one was kind of lighting it up over there in the pit chat? I think late last week and earlier into this week, just kind of along the same lines. Uncle Mike was just saying that the vol levels out there are fairly low. I mean, again, we're not in the go rah rah days anymore, where vol at these levels would have been just a screaming buy, but it's still I think a fairly attractive level, all things considered. So, what was lighting it up for the Apple heads out there in the pit chat today?
I mean, 2 years ago, I would have looked at this, even a year ago, I would have looked at this Apple vol and said, I want to own it even if it wasn't around earnings. Now, it's actually a little bit high relative to where it's been the last couple months. That said, I'm with Mike. I don't think this premium is premium to be sold. I think it absolutely looks like gun to my head, I would want to own it. And actually where I think there's value in owning options in this thing is in some of the back months. Some March and April, the premiums are the volatility still in the teens. That's almost no markup. So if I had a directional opinion, I would be a big call buyer or put buyer.
Yeah, it is, regardless of your opinion, it is kind of hard to argue with these levels here. It's a name that has performed historically, even though the last year or so, last few quarters haven't exactly blown the doors off. And if you can get a cheap swing at the fences there, particularly if you mitigate it with some legs on some spread to the outside to offset your outlay a little bit. There are perhaps I've seen people diving into far more ridiculous earnings plays than this one, shall we say. Speaking of earnings plays, one other one that's coming off, actually popping off before the bell tomorrow. Thought we'd get it in really quick here under the radar. Because I know a few people like to write in about this one every now and then, even though it hasn't been the sexiest name of late. This is good old Under Armour. Easy for me to say today. Under Armour, trading right around $25. They were pricing in looks like about a little over $2 straddle, so it works out to about 8.5%. This is a name that's only been doing about 1,600 contracts a day, about 12,000 today. So lighten it up a little bit before earnings, about 2-to-1. Calls over puts, that should give you some idea of where this thing has been leaning of late, but a kind of a weird one. Again, this is not, I don't think, maybe even on the radar of some people who like the Lulus and a few others out there, but still, this one tends to creep up in our inbox every now and then, so I thought I would put it out there. Any excitement for this one in the pit chat? I know you won't be into this one, Uncle Mike. What about you, Mr. Greasy Meatball? Any excitement in the old PC for this one?
The old pit chat for. I'm sorry, I missed. I was.
You busy breaking up fights on the playground again? Under Armour.
Under Armour. Not one we've been talking about. There are a few we've been looking at. Under Armour. The whole retail space is kind of weird right now. Actually, the one I've been looking at the most is Coach, which is also tomorrow.
Well, speaking of Coach, let's just get right into it then, because it's also a victim in our odd block. So let's get right into it with a little bit of heading down the weirder side of the options market with the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
Everybody, welcome to the Odd Block. Like the man said, this is indeed the portion of the program where we break down some of the weirder, the wilder, sometimes just more unusual and head-scratching paper that is catching our eye over here in the old options market. Let's kick it off where Greasy Meatball was just talking about. A good old Coach, ticker symbol, of course, COH, closing today just a hair under $36. This is the name that does about 4,200 contracts a day, doing a fair bit more than that, doing nearly 40,000, so about 39,000 and change today. Pretty aggressive day, about 1.7 to 1 calls over puts, so a slight call bias, though not huge, and a good chunk of that, how many total options we say? About 39,000. A good chunk of that going up in this fairly sizable call rider. It was out here pretty near term, too, which kind of caught our eye. It was the 37s, the Feb expiring on the 3rd, so coming up fairly soon. 37 calls going up, starting off with a few blocks here, one for nearly 4,000, paper selling for 40 cents, then a second block for about 3,500, for a little bit less, for about 35 cents. A total of about 8,500 contracts going up on this strike today. All that pretty much opening, only 143 contracts open here on this strike. Two, like I said, going up in those two large blocks earlier in the morning over there on Amex. And it looks like someone actually, well, at the latter kind, had to kind of blast it through the bid a little bit, so had to work a little bit to get that amount of size done. Again, like I said, this isn't the most active of names on a given day. They do about 4,000, so doing 8,000 in that one trade is about 2x the ADV we're seeing already. So bit of work to get that done. Of course, like we said, today a little bit more aggressive and busy days than usual. We also saw a decent number of about, looks like 2,000 of the 36 calls going up. It's expiring on the 3rd as well. So if you're into near-term calls, this is the place to be. Like we said, they're popping off tomorrow. Before the open, they were pricing in. I'll have to go look and see what they were pricing in. They closed there at about $36. So they're pricing in right about $220 or so on this straddle out there today. I'll have to look, see historically how that lines up to previous coach straddles. But what's interesting, too, looking back historically, this name has kind of been all over the map over the past year, hitting a high of about 44 back mid to late summer, late July, early August time frame, and then kind of trended down fairly aggressively to where it is here. Bounced a little bit, had a little bit of seize of life back in December, hit about 38 again, then kind of trended off again. So this thing's kind of been vacillating around quite a bit. As you might expect, earnings a big driver of that vacillation, and at least so far, someone for about 2x worth of the ADV out here deciding that 37 by the end of the week is a fairly safe place to draw a pretty sizable line in the sand. Mr. Greasy Meatball, what are you thinking about this? Clearly has all the feelings of a near-term call overrider against some stock. What's your feeling on this 37 level here for 37.5 on splits?
Yeah, that's not a bad sale. I mean, this is a name that looks like it might be a little could get bullish into earnings. I'm just not so sure how much it might move. I like the play if you like collecting some volatility. However, this is a name that, as I look at it, it looks like it might move a little higher. But, you're right, and you do some overwrite. Maybe the guy has some stock that he's it would be willing to part with at 37.5 or so. It's kind of it's an interesting play. Little odd that he would do it over earnings week, but it's not completely surprising that someone would want to do that trade.
Yeah, well, he's obviously taking advantage of a little bit of near-term premium to get a little bit better juice, even though he had to kind of chase that second chunk. When you're doing 2x the ADV of a name the ADV of the name in each individual block, 2x total in the trade, then you're going to have to work a little bit. And our friend here did exactly that, having to put in the second block. Maybe getting a little greedy with that second block and having to force it through the bid. By the way, he looks like he's happy to get out a little bit north of the 37 handle, if that is indeed, looks like he's an equity holder. We don't know for sure, obviously, listeners, but has all the inclinations there of a typical call overwrite against stock. We'll see later. Actually, we'll see tomorrow how that fares on a strike and a performance level. Again, they're pricing in a decent move, a couple of bucks out there. So we'll see how that 37s comes to pass. Meanwhile, we're moving on to another interesting name in the brand space, Constellation Brands, ticker symbol STZ, closing today 148.34, off about 60 cents or not even 0.5% on the day. So it was about in line with the broad market. It wasn't a huge underlying day for this name. This is the name that does shy 8,000 contracts a day, about 7,700, doing a little bit more than 2x that today, doing about 16.3 out there. Total about nearly 2 to 1 calls over puts, and that should give you some inkling of what caught our eye out here today. And a little bit longer term than expiring on the end of this week. We got someone going all the way out to Jan of 2018. In particular, it was the 165, 185 call spread going up. Looks like paper buying. And then to pay for all of that, or at least a chunk of that, we saw paper also trading the Jan 2018 125 puts. So again, it says all the hallmarks of a traditional upside vertical financed by some downside puts. Again, it was about 4,300 of that vertical that first caught our eye, and then only about a small number of the puts, not enough to cover the whole thing. As the day went on, it looks like actually that was about the total of the call spread, and then the puts kind of caught up. So by the end of the day, it was 1-to-1, 4,300 pretty much on each strike, doing the call spread for 490, and looks like the puts for 620 out there. It's one up in 4 blocks over there on the Philly, so it had to be finagled a little bit. Again, this looks like it is our traditional long-term call spread financed by some puts. A caveat that there is some size open interest on all of these strikes. There's about 12,000 and change open on the puts, 8,700 on the 165s, and 9,000 open on the 185. So our friend here could be diving in and adding more. Looks like some size went up not that long ago, about a week ago, out here on this strike as well. And so it could be someone piling in, or it could be someone deciding, maybe it would be weird timing to close out a 1 year out spread like this with the puts, but he could have decided maybe his analysis was wrong, maybe decided to get the heck out of Dodge. This isn't lining up the way he thought. Looking at the year that was for good old Constellation Brands, hasn't been as crazy of a year as perhaps some of the other names, even though back in the dark period of early February last year, this name was trading right around 130. So a decent way south of where it ended up peaking earlier or later last year, which is right around 172. So had about a 30 to 40 handle range over the course of the year. So it actually did all right once you start factoring in some of these crazy gyrations here. And it did gyrate again towards the end of the year last year, with Q4 vacillating between, looks like about 160 on the upside and about 145 on the downside. Our friend here clearly thinking that range is going to be a thing of the past, giving himself some time for it to come to fruition, though, too. Not doing it by the end of this week, but actually by the beginning of next year. So what do you say, Mr. Greasy Meatball there? Are you liking looks like a little bit less than 20, about a 17 or so rally on the upside? This guy needs to kick this thing off, and doing that with a nice little put spread to pay for the whole thing. What's your take here on this vertical with puts in STZ?
Well, Constellations has some exposure to Mexico and stuff like that. So maybe the reason to add is you get a little volatility pump, and a little bit of that could be something that makes this trade a little better. So that was kind of my thoughts when I saw the trade. Maybe the guy saw, maybe there's a little Mexico volatility and import-export volatility I could take advantage of here.
Why on earth would there be volatility with Mexico right now? I don't know what the heck you're talking about, sir.
I don't know. Yeah, me neither.
What could be a potential driver for such nonsense you say here on the show today? So I don't know where you're getting all this very heated rhetoric from. Instead, we'll turn on to our final name, our final victim here. This is the name we talked about once or twice here on the old Odd Block, and they rear their ugly head yet again. This is Pfizer, ticker symbol PFE, closing today $31.31. A bit of an interesting one there. Again, off pretty much unched on the day, so it wasn't underlying that caught our eye. It's the name that, as you might guess, does pretty decent paper, about 51,000 contracts a day, doing nearly 2x that, doing about 95,000 contracts today. Again, this is another pre-earnings name. They have earnings popping off before the open tomorrow. Looks like calls were where the action was today, to the tune of about 2.6 to 1. Calls over puts. That'll give you some inkling of what caught our eye today, and what caught our eye was also just spoiler in the call side of the fence as well. It was the straight up, here they are, Feb 32s. And if you scroll down, listeners, you'll see them coming off your screen here as well. The Feb 32s going up. Looks like someone deciding to swing a bit not necessarily for the fences. 32 isn't the most aggressive of strikes, or optimistic of strikes, I should say, really. But it was, and size-wise, it was pretty decent. This name starting off about 3,500 for 15 cents. That was the first block that went up on the SIBO as the day went on. A total of 14,000 and change. The latter kind going up at a little bit higher prices. These calls went out 16 cents at 19. No doubt a reflection of that just aggressive buying spree on that strike. There is some OI on this strike to speak of, about 21, nearly 22,000 contracts. That is in line with kind of the OI on the 33s as well. So it looks like a vertical may have gone up out there. Interesting stuff out here. We also saw some 31 halves earlier going up, not as many as these, obviously. Looks like some of that actually with some stock. But these look like they were straight up as they are written on the page here, 15 cent to start and all the way up to probably, I'd say, 17 to 19 cents for the latter kind. Looking at the year that was out here in good old Pfizer, this thing topped out, looks like right around $37 or so back in the beginning of August. Then a dividend and earnings and everything else kind of combined to drive them all the way back down to the 30 handle. And then they kind of have been vacillating in that 30 to about 33 half range ever since. And our friend here, obviously, looking for a nice little pop here to round out the earnings season. Again, 32, not the most optimistic of strikes, but he doesn't have that long for it to pay off, and he doesn't have to pay a ton for it to happen. So a nice little spike here to the upside would suit him well. Like I said, they closed right around 31.5. Looks like they're pricing in about $1.15, $1.20 or so in total movement. So if we get that, and it's all the way this guy wants it to be, north to the north, he'll look all right on these calls. So he needs probably a little bit more than that would be good, but that would at least do him for now. Give him a chance to get out for a little bit of money. Mr. Greasy Meatball, take us home here. What's your feeling on these kind of little late to earnings swing for, I won't say the fences, I'll say like a nice double to triple here in Pfizer?
Yeah, I mean, I think that's exactly what it is. I think it's somebody that says, oh, I think I've got a real good chance to potentially catch a pop here. Plus, these names all took a little bit of a Trump hit with, we pay the drug companies too much money statement that he made. So it could be somebody thinking, earnings come out and, maybe the stock they'll make a run. That's kind of that's my thought process.
It does have that feel to it. We'll have to see tomorrow, not that long after the bell. We'll see if our friend is smiling or if he says, hey, I just wasted 15 to 19 cents. Oh, how many total did he do? About 13 to 15,000 times. So that'll leave a mark at the end of the day. We'll see. Meanwhile, it's time for us to keep on rolling. It's Monday. It's time for some of your questions in the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the man said, this is indeed the portion of the program where we break down your questions, your comments, your insights. You guys take us into all sorts of dark and bizarre and disturbing places. We'll kick things off nice and easy. Actually, we'll pay off what we talked about last week. We asked you guys who was going to outperform from an earnings perspective last week, and pretty much everyone whiffed at bat last week. We gave you the choices of Apple, Microsoft, Intel, and Starbucks. The only one even showing a threat, a very brief flirtation with their straddle. I think they exceeded it a little bit by about a nickel or so, maybe a little more, was a good old Starbucks. If you picked Starbucks, all I think 15% of you who did so, congratulations to you. I should also mention Uncle Mike because he did pick Starbucks. I'll give him that point. But it was so popular with you guys, we thought we'd do it again. We are in the teeth of earnings season, so we asked you guys, all right, time for another of our silly little phrases here, straddle battle. Kind of like it. They say, time for another earnings straddle battle. Which stock will outperform its straddle by the largest margin this week? We got a few big names for you guys to choose from. Starting off the big A, Apple, talked about them earlier. Of course, Facebook, another one coming off this week. Amazon, you may have heard of them. They have drone infamy, also popping off this week. And last but not least, the former stealth Apple, not that stealthy anymore, really. And also price-wise, not really in the same conversation either. So a little bit different beast. That is, of course, Chipotle, they of botulism and burrito fame. So we gave you those 4 choices. Let's start with you, Uncle Mike. What are you feeling here for this week? What's going to blow the doors off relative to its competition this week?
I'll go with burritos and botulism. Let's go with Chipotle. Anything that's known as the stealth Apple, and the fact that I think that Apple might outperform its straddle, I'll go with the stealth Apple, by gosh. And that's a highly scientific, well, actually, it's a total random whim.
Kind of hard to argue against burritos and botulism, is it not? So 1 vote there for Chipotle. Mr. Greasy Meatball, what are you wagering on for this week in this week's contest, sir?
My 4 choices, it's Chipotle,
Amazon, Facebook, and Apple.
Oh, wow. I think all of them will, except for maybe Amazon. I would be thinking, just based on the fact that Apple volatility is at like a decade low going into an earnings, I would say that is the one that in a relative sense is the cheapest. There's some teeth to Facebook. There's some teeth to Amazon. Maybe not as much to Chipotle, but Apple just seems like the most mispriced. So that's one that I think could pop.
Yeah, I was kind of leaning that way after looking at these names again myself earlier today. Obviously, Chipotle, the priciest of the bunch. So if you go, pure bang for your buck wise, maybe Chipotle could have a chance to outperform. And you never know when another botulism debacle could be on the horizon to really cut the legs out from this thing. But from a pure, price to vol standpoint, I might have to lean the old Apple as well. It does seem to be the most reasonable of this bunch, at least historically. So I'm going to lean that way. Let's see which way our listeners are leaning. Again, listeners, is the question of the week, so you have all week if you haven't voted already. Just went live a little bit before the show here today. And so far in the early tilt at the windmill, Amazon taking a commanding lead with 44% out here. So nearly half of the people out here saying Amazon, which is interesting. I could see their logic. It is the priciest of the bunch. So you may want to go just betting on the one that may be the most prone to an aggressive swing. And those big names have a tendency to sometimes get their wings clipped or just explode to the upside, more so than a $5 name. So you could certainly see some of that logic. Apple number 2 with a little over a quarter of the votes. And then a tie for third, Uncle Mike, with Chipotle and Facebook. Each of them bringing up a relatively anemic 15%. But again, the voting is just opening. So you guys, if you haven't gone on over to @options on Twitter or on StockTwits and make your thoughts heard. If you have a different opinion, let us know as well. We'd like to hear from you guys. Let's see. We got Mike, the Protected Trader. He just voted in, said Facebook. Okay, we'll tabulate your votes along with the rest. You can also vote in the poll right there. You don't have to tell us. We don't mind you telling us, but if you want to get it counted in the poll, make sure you press that button there. Michael Coretta, he says, hey, there's still someone out there that buys straddles on earnings. That's amazing. Well, we don't buy them. we don't advocate you going out there and doing that. We more just use them as an indicator. I think you can tell by that poll. But who knows? Maybe in Apple, if I had to pick buy or sell that straddle, I guess I would have to buy it. So maybe in that case we are talking about doing that. But still, straddle's as useful as a tool, perhaps more of an analytic tool than a trading tool around earnings. But that said, some of these names offer interesting opportunities. All right, what else we got here for questions? We got a bunch. Let's see here. We got a long one here from Michael Gavriel. It has to do with the show, kind of inside baseball stuff. He says, hey guys, I appreciate all the programming. As far as I can tell, the Option Block podcasts arrive a little bit late. Maybe it's my podcast client. I haven't looked into it. He mentioned show episode 572. It was a recap of Thursday's action. He said he would like to have it on Thursday night. And he says the podcast version comes out in the morning, which it does. He said, I guess on the 11th, so it's sort of used to keeping me abreast of the action ahead of my trading day. Just curious if this is how your guys' schedules work. Maybe you can record the next morning and release midday, in which case I'm a bit out of luck in terms of being a super timely source. But if it's something doing wrong on my part, please know. Michael, no, it's not something you're doing wrong. That's kind of the way it works. We kind of have, a lot of people have written in with that too, like guys who are kind of on the tip of their computer. They want it actionable and live right now. Well, that's what the live stream is for. If you haven't discovered that yet, head on over to Mixlr.com. Just search for options. We'll come up there. Search for options inside. I think the actual URL is options-insider. I hate those hyphens and underscores. That's kind of just the way it worked out on that platform. If you once you bookmark that once, or better yet, set up an account for Mixlr. It takes about 2 seconds. It's free. And then you get notified the instant we go live. And then you can see it right away. So you can listen live. So if we're talking about something or bringing up some sort of actionable idea you may want to follow up, or some research idea or something else like that, you can get it live right there. I should also mention, we don't pull those down right away either. So the recording of that live broadcast also stays up there for a little while. We eventually will go up and curtail it because we want you to get, after the fact. There's no sense going to get, like days or weeks after. There's no sense going and getting that version. You might as well go get the nice produced edited version that you can subscribe to on your iPhone or wherever else you get your stuff. iTunes, etc. So you're welcome to go there. But we keep those up for at least a couple of weeks. So if you missed the initial live broadcast, but you still want to get it before it comes out bright and early the next morning, all the nice edited fine version, you can get it right there on our Mixlr page as well. So it's not just a place for live streaming, even though we welcome you guys to come do that. You can also go listen to it after the fact. So if you don't get out of work till like 5 something, you want to hear it on the way home, we publish the recording there for you. Again, it's not as clean and nice as the final version. We can't take out all of the greasy meatballs and missteps there on that version. But still, if you want it more immediate in your ear holes and straight to your trading, then that's probably the easiest place to get. So now we have 2 versions readily available for all of your different types of schedules. All right, next up, we got a question. We got a bunch of people asking about this one. This one is, I think you guys, if you guys saw the show notes, Mark and Mike, you saw the link here from this Bloomberg article. This particular one pick comes from Tom. He wants to know, what does this article mean? It's let's see if I can click on these articles, just look what they're talking about, and you get just ads everywhere, left, right, and center. All these videos just playing nonstop. But this article was called S&P 500 options showing little fear over Trump policy for now. I think this came out last week sometime. And Mark, this kind of stuff we talk about in volatility views a lot here, talking about the smoothness of not just the VIX term structure, but the SPX futures term structure out there as well, SPX options term structure, and of course what it's pricing in, again, not factoring in a huge bump in terms of going down the road here for Trump. Also, the volatility skew not exactly showing a huge degree of uncertainty, despite the fact that we're seeing pretty lofty levels here in the S&P. They also mentioned a few indicators I'm not that familiar with, including the Merrill Lynch option volatility estimate, or the MOVE index. They say that's near high levels. I am not familiar with that one at all, so I can't speak to that one. That said, Mr. Greasy Meatball, any thoughts here for Tom and the other people who are somewhat befuddled by this article, sir?
Yeah, well, the MOVE index is kind of like Merrill Lynch's VIX.
Yeah, they all have one. Barclays has one. Everyone has to have their own version. How far out do you go for the puts to pay for the calls, et cetera?
Well, but MOVE also includes some stuff with bond options and some other place.
So you actually watch the MOVE? You're a mover?
I don't. I just know what it is. So I do not actually use it, but I'm aware of it.
You heard it here first. Mark Sebastian keys all of his trading off the MOVE index.
You heard it here first. But there are some, what they're basically saying is that right now option action is not acting like people are scared, and it's not. But maybe there's good reason. We're not moving around very much. What's interesting is VIX is simultaneously a trailing and leading indicator. When volatility completely stops, typically that will lead VIX lower. But VIX will tend to catch a little bit of a bid before things move around, and it'll tend to sell off before things stop moving. So, that's really all it is. I did see that the skew index is still pretty steep, so there is still some pretty decent hedging going on, and And as I mentioned today, VIX is high enough that there's some people that are a little bit worried.
Yeah, of course, spiking to near 100. The move index aside, it is funny. I was joking earlier, but every bank seems like they have to have some sort of that, their own proprietary version of a VIX type thing. They obviously can't use VIX, so this case will maybe have an aggregate of a bunch of things. Some people will compare whatever 25 delta call, how far off you have to go to pay for the put, or vice versa, and all these weird abstract ways to kind of back into something that is an approximation of VIX, so they can own it and make it proprietary. So it's easy to lose track of all these myriad and sundry things out here. Uncle Mike, anything on this one before we move on to some other questions?
No, I mean, it's not surprising. I mean, even if it feels like we're kind of in rally mode overall, but we're at levels right now that we've been at since early December. So it's, to add to Mark's point, yeah, it does seem like the option world or the market is rather complacent, but Mark's right. We really haven't moved around a lot.
Well, speaking of movement, we have a question here from Kukas. Kukas, I believe that's how it's pronounced. If I mispronounce it, I apologize. He, or perhaps she, writes, the researchers say we were in the most narrow equity range since 1933, just prior to the election. What's the best way to trade that? Sell a far out straddle. That's interesting. Maybe he meant strangle in that environment. But a straddle would do it if you really wanted to play pretty fast and loose with your risk tolerance there. I'm not sure what he means by, I think by obviously far out, he obviously means strikes. I think he meant to say, or she meant to say, strangle. And that is certainly, one way you could do it if you find, the borders of that equity range. I guess that area you're talking about was just prior to the election. So I guess that period into late Q2 into Q3, right, just leading up into October. Maybe that band there is the time frame you were talking about in that section. I'll have to go look and see exactly what the equity band range was for that period. But yeah, if you can determine those levels, and then if you are comfortable there selling that out of the money strangle in whatever length you're comfortable with, we like to migrate those things a little bit closer. So somewhere in the month to a few months, weeklies if you're very aggressive. You're not gonna get a lot of bang for the buck in the weeklies if you're going far out though. So maybe a little bit longer term, a month or two. And then of course we always like to advocate here a little bit of risk control on that end. So rather than just naked blasting out straddles, you can then turn that into the aforementioned, when I was just joking with Uncle Mike, the aforementioned iron condor. So you buy another strangle farther out to keep the worst from coming to pass. If the market does fall out of bed or explodes to the upside, you're not going to get just completely blown out. That's why iron condors are so attractive and have been for so long. They give you a lot of wiggle room in the middle, but they keep you from getting your doors blown off if something crazy does happen. You can go a little bit tighter. My old personal favorite, the iron fly, but that's a little bit more of a nail biter. I don't know if you want to go that range, particularly if you're just worried about this. But there's a lot of ways you could do that. That's just one way you could trade that sort of range. And if you think it's range bound, it's going to vacillate back and forth. Maybe you want to be a little bit more aggressive and trade it that way. I don't know. Let's go back around the horn. Oh, geez, hitting things there. Go back around the horn the other way. Uncle Mike, we'll start with you. Let's say Mr. or Mrs. Kukas's supposition is correct. It was the tightest range since the 30s out here, just leading up to the election. How would you like to play that? I'm assuming the 1/3 ratio iron condor swap that I referred to earlier is your desired course of action.
As much as I'd like that one, I think. Well, let's go from aggressive to conservative on this one. The most aggressive way would just be to simply buy calls if it's in a range, and that's what you're determined that it is. Buy calls when it's at the low end, buy puts when it's at the high end, and by doing that, or call spreads or put spreads, whatever you feel more comfortable with. That would be the most aggressive way, but that's a directional play, and you're just basically trading a channel. It's like if a stock's in a range, you buy it when it's at support, sell it when it's at resistance, and the old adage, buy the dump, sell the hump, and don't diddle in the middle. The other way with which you can do it, if you want to have more of a neutral stance, of course, you do have the iron condors as well as the straddles, as you described. But the other thing that you may want to consider, and this would be one to where you may want to contact Mark and get a class on it. I'm sure he has something to this effect, is either a diagonal spread or a calendar spread, something with which you're trying to take advantage of time decay in some way. What I mean by that is, let's say that you believe that you believe that the market's not going to move very much. Well, the theoretical advantage of a calendar spread is that the near-term options will lose time decay faster than longer-term options. Now, of course, there's skews, there's different strike prices where that works more than others, but Mark has a whole slew of classes on that type of thing. So that's another way with which you can do it. So there's a variety of ways of doing it. Once again, the most aggressive, I believe, would be to buy the low and sell the high. Something more conservative would be either a calendar spread of some sort. If you do go with a far out of the money condor, it's conservative, but the time that it doesn't work, it becomes very aggressive when you don't want it to. So I would err with caution if you were going to go the condor route, especially with volatility this low. If you have some type of stop loss point long before it gets to your short strike. So that is my 2 cents on it.
Mr. Greasy Meatball, same question for you. Obviously, a lot of ways you can play it. Uncle Mike talked about kind of channeling a little bit too, writing it up, writing it down, and writing the direction that way. We talked about, collaring it or, strangling it the way they asked initially. But there are other ways. What do you have to say here for our friend, Mr. or Mrs. Kukas?
The old strangle pong where, you buy and sell. I agree with Mike. Some of those wide condors, you think they're really safe, and then they just completely blow up. They're a complete mess. So I'm not a huge fan of those. Calendars are real nice diagonals. We do have classes on that. You could go into like using the VIX complex to express some of those ideas. So there are all sorts of different ways to express it. But I have to say, everything Mike said, I'm on board with 100%. Don't like those wide out trades. I would say that I like butterflies a lot. I don't consider them very risky if set up properly because they can be inexpensive if they're set up right as well. So I'm a big proponent of like, iron flies or, relatively tight iron condors. Those could be good ways to as our old friend Alex would say, harvest premium.
Yes.
That's I kind of echo what Mike had to say. And yes, we have classes for all that.
Classes for all that. I'm going to guess if they're confusing a straddle and a strangle. Maybe they're not ready for the diagonals yet. But it's interesting stuff. There's, again, pick your poison, listeners. A lot of different ways you could do that depending on your risk tolerance and your knowledge of options and everything else. We just outlined a few for you there. Let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the portion of the show where we break down what we're keeping an eye on for the rest of this week. We already touched on at the top of the show. Good old Apple popping off tomorrow after the bell. We also got Exxon, Nintendo, good old Nintendo. We'll see a lot of things factored into that one. Hardware sales, Pokemon Go, silliness, anticipation, guidance for the upcoming new console, all kinds of crazy stuff. So maybe an interesting one to watch there, more for the guidance than probably what they're going to say for the last quarter. Of course, hardware sales for the holiday, also a big thing for them as well. Pfizer, you mentioned before, Under Armour, Wednesday, Facebook, and Thursday, the aforementioned Amazon and the stealth Apple, a.k.a. Chipotle. Stealth botulism, and Merck rounding out the week. A lot of other big names popping off. Those are some of the ones we know you guys like to pay attention to. Also have a little thing coming up on this Friday. I believe you call it the non-farms, but I could be mistaken. That said, let's start with you, Mr. Greasy Meatball. What are you watching for the rest of this week into the weekend, sir?
I'm watching non-farms. I'm watching Fed. I'm watching, what will our president tweet. So there's a lot of different stuff I'm watching. So,
the daily Trump tweet game. You're keeping an eye on that one.
Yeah, the Sean Spicer interviews. It's I'll tell you. We got confirmation. So there's a lot of plus earnings, Apple, all these different names. So there's a lot of different pieces that I'm watching. That today could be an interesting day and an interesting week. And for good reason. I mean, you look around, this is a packed week. There's plenty of reason for volatility to get a little bit of a bid.
don't know if you heard our most recent episode of Trading Tech Talk, but we kind of talked about this cottage industry that is forming up. There's been a lot of startups going after the social media, trying to find the signal in the noise there, and doing that. That's been the big startup thing for years. Now we're seeing a microcosm of that. Firms that claim to have the handle on the Trump indicators and creating all these Trump indicators. Where will he strike next? What will he do to the name once he tweets about it, et cetera, and so on and so forth. So applying a lot of that social media analysis and machine reading we've seen in other areas, and applying that specifically to Trump. So if you're so inclined to look at that kind of stuff, maybe one of those will intrigue you. Uncle Mike, take us home, sir. What are you watching until we next gather here for Thursday for our update on all things Stealth, Apple, and Amazon?
Everything that Mark said, and in terms of the Trump tweets, how cool would it be to just steal his cell phone for a day to tweet out a few things just to see what would happen? But anyway,
Secret Service may frown on that sort of thing. I'm just saying.
They probably would. But yeah, I think the only real, or not the only real, there's a lot of things going on this week, as we've been talking about for the last couple of weeks. So I'm watching everything.
You're an easy man to please these days. He's watching a little bit of everything. There we go. Can't close out without the music. But once again, we have come to the end of another epic sojourn through the world of options. Kick things off. Apple, Dow sell-off, VIX pop, a little bit of Under Armour talk as well. Talk some unusual activity in Coach and Pfizer and good old STZ. Not a frequent one we talk about a lot there. Got into some of your talk about your questions about the MOVE index, amongst others, as well as the programming and, of course, the myriad different ways to trade a range-bound type of name using options. We highlighted a few. There are many more ways you can do it. Check out our Options Bootcamp program and other things to explore all of those, as well as we also looked ahead at earnings and some of the names that you guys are thinking are going to light off. So we'll see how that fares on our next show on Thursday. But before we go, one last time, let me join my cohorts here, my partners in crime. Let's start with the land of the meatballs. Sir, what do you have cooking off this week in the land of the pit that may interest our listeners?
We have our event on trading long gamma and owning options next Saturday. So you can go to optionpit.com/events to check it out.
Buying options, also known as the Don Schlesinger webinar, sir.
Oh, it'll infuriate. Everything about that webinar.
You have to send him a link just so I could see his response, because I'm sure he will like it. The man who infamously said options are for selling and not selling, and that options die a little bit every day. Check it out. You too can learn how to buy them. Optionpit.com /gamma to learn more. Very interesting URL. I like that. All right, and Uncle Mike, last but not least, what is cooking in the land of all things RCM Wealth Advisors?
Well, for the next couple of weeks, I'm just having a waiting list, guys. You guys have given me so many new accounts over the course of the last couple of weeks. I need to kind of chill out for a while. So for now, if you're interested in going on my waiting list for either being an advisory client or a self-directed client who occasionally calls them for advice, shoot me an email, mtosaw@rcmfs.com, and I'm hoping by mid to late February I can get back on it.
Look at that, saying he's turning the people away, saying, you know what, you've just deluged me with requests. I can handle no more. Check back in February. I like the good news here, Uncle Mike, that people are just deluging you with requests. If you want to get on that waiting list for yourself, hit him up over there, mtusaw@rcmfs.com. And on behalf of Uncle Mike and the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. We'll come back to you on Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.